Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So, with that, LME 3-month nickel. Okay, so just to remind you once more, and it is a timely reminder given what happened 2 weeks ago, as I've said repeatedly in this commentary for months and months, the most significant feature of this market has been the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24, most recently in October, November, and early December, and I suppose also the congestion in January, February, late April, May, and early June this year, and the high 2 weeks ago. Excuse me. I'd also add that for many months I had also highlighted how the 15,840 level, along with this low for 2021 at 15,665, was and is still a key level. So at 15,665 we saw, moving down through last week, the gold long moving average, currently at 15,600. A few weeks earlier we saw the significant bright red upper tide, currently at 15,465, the early October 24 to mid-March 25 bearish shift pitchfork, also moving down through it, along with earlier the mauve medium moving average, currently at 15,425. These are now looking to challenge the next congestion below them, that is now above the market, and that's the 50% Fibonacci line for 2025 at 15,325, and finally above and close to the market we have the declining green short medium moving average, currently at 15,225. As I've repeatedly said before, altogether some of these are some pretty heavy duty resistances which have earlier capped the market. Meanwhile, the market has declined late last week to test has decided late last week to test the recent congestion zone below between about the 50% Fibonacci line at 15,325 down to the November 2020 low at 14,935. Prices have pierced this support, but as yet the market has not established itself below it, though it is looking very, very, very vulnerable right now. So if we take a step back, I said over the last 3 weeks, and I quote, "Over all the recent actions we have the bright red early October 24 to mid-March 25 bearish shift pitchfork in charge. The question is whether the bright red upper tide can withstand the pressure building up to challenge it. If it does, then, as I said last week," so that's now 3 weeks ago, "as I said last week, and I quote, the hesitation we saw in April and May ahead of the 16,000 to 16,780 area was enough that we can look at the mid-April to end of May action as a double top pattern, even Eve type. 7 weeks ago, so that is now 9 weeks ago in real time, we reached and breached the neckline for this pattern down in the 15,200 level, just below the 50% Fibonacci line for 2025 at 15,325, end of quote. I further added, and I quote, you would need confirmed consecutive closes below this level to contemplate the downside, but whilst I cannot set targets below, I can indicate potentials. Thus, a primary potential for a confirmed break low will be down in the 14,835 zone, so not too far away, whilst a secondary potential low will be down in the 14,380 zone. I say again that these are just potentials, but ones that might come about as targets if a move lower happens before I get a chance to commit next time. End of quote. 7 weeks ago, we tested lower to new lows not seen since mid-April, leading me to clarify the status of these two potentials. Thus, we had a primary target X1 down at 14,380, which is still live. I added last week, and I think these comments still matter when I said last week, and I quote, the secondary target X1 is once more, if not directly under threat, they're in the region of being threatened. Only a concerted move over the subsequent stabilization over the combination of the bright red upper time and the gold long moving average would lead me to reassess the viability of the secondary target X1, which this belongs to, that is below, sorry. End of quote. It seems that there is now even less of a chance of pushing up over the bright red upper time than there was last week. LME 3-month zinc. Now, much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the thoroughly broken, but even now still refusing to die, old dark blue May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines. This one still will not die, even when I thought 17 weeks ago that it had finally expired. It came back like a high-functioning zombie, influencing and impacting the market, especially the dark blue lower tine, currently at 26.88, and more recently the dark blue middle tine, currently at 28.53, which had the declining gold long moving average, currently at 28.38, crossing down through it early last week. Next we have the bright green mid-December 2024 to mid-March this year bearish shift pitchfork. Prices 3 Fridays ago broke clear up and out of this pattern, and despite a dip to retest the broken bright green upper tine late last week and early this week, have seemingly started to stabilize over it. These actions, as I said last week, put this pattern on notice of being retired. Meanwhile, looking below, well, as I said 8 weeks ago, and I quote, I'd keep an eye on the declining green short medium moving average, the currently at 27.23, and the mauve medium moving average currently at 27.26, plus what I suspect may be a key level, and that's the 50% Fibonacci line for the whole March to April move at 27.55. Now, this is not the whole of the 2025 action, just the whole of the major move in the last few months. End of quote. These three in the past acted as a base of action for the last sweep higher and are making a big effort to try and do so again this week. However, on all of this I said 3 weeks ago, and I quote, so we are finally left with a choice on the interpretation of what the whole late March to date drop and hesitation might be. So, is it a basing action for a possible future attempt higher, back up to the broken dark blue upper tine, currently at 30.18, or is it hesitation, a somewhat large hesitation with potential down to the 23.10 zone? Right now, it's not easy to say which, but I would keep an eye on the following: the bright green bearish shift pitchfork, the short medium and medium moving averages, and the 50% Fibonacci line at 27.25. Sorry, at the 50% Fibonacci at 27.55. They all have given a clue to a somewhat bearish future, but this has been countered by the big old broken dark blue lower tine, which is still here. End of quote. Yes, the big old broken dark blue lower tine lit the fuse for the latest attempt higher late 2 weeks ago, but the combined gold long moving average and dark blue middle tine dropped a whole load of sand on it 2 weeks ago. And as I said last week, and I quote, may have extinguished at least temporarily the bullish incentive. End of quote. The question I now raise is whether the reactionary nascent move higher, move back seen this week, is enough, as if I suspect right now we may not have enough to make a higher high than the one we saw 2 weeks ago. Well then, the pressure on the downside beckons again. But if we make a higher high, and even if we pull back from that, well, then the opportunities on the upside, especially the dark blue broken upper tine, well, they look more promising. Watch this space. LME 3-month tin. Okay, so the big picture here has been centered for quite a while on the dark blue late November 24 to mid-April 25 bullish shift pitchfork. We're in between the lower tine below, currently at 34.30, and the middle tine above, currently at 35.215. Now, as I've said here before, much like some of the other metals I've discussed here today, there are a number of patterns here affecting the market all at the same time. From the bottom upwards, we have the low of April, and 2025 so far at 28,925, just below the July 2011 high at 29,005. On the way lower, prices pass through the now flatlining long moving average, which is now again support, and that's currently at 31,745, though a way below. Closer support is from the mauve medium moving average, currently at 33,020, and the nearby green short medium moving average, currently 32,920. Though this latter green one, to my mind, is dubious. Then there is the purple neckline extension, currently at 32,725 of the April 24 Head and Shoulders continuation pattern. This had been the resistance in the recent past, but I suspect it might now be more of a support or an attractor, if you will, than anything else. Overhead now, and we have the small but significant congestion of the previous all-time high back in April 2011 at 33,605. And the close by 50% Fibonacci line for the whole of 2025 so far at 33,660. Remember that one. These two have been interfering with play and may do so once again, so watch out. Further above is the next 50% Fibonacci line, this time for the March to October 22 move at 34,175. We then come to a close-in trio of resistances that are now starting to spread out. They are the dark blue middle time, currently at 35,215, the bright red neckline extension, currently at 35,315, of the August to November 2024 Head and Shoulders top, and the interesting, though I'm not sure how good it would be, interesting bright green lower time, currently at 35,640. Of the broken November 23 to November 24 bullish shift pitch fork. Now, I've been on the verge of retiring this last one for quite some weeks, as it has broken. It was broken back in April, but it's seen some good action since as a dynamic resistance. So I thought it's still best to include it. Now, I had recently put forward the idea that the whole early April to date action could possibly be a really, really big bearish halfway hesitation. However, as I mentioned 3 weeks ago, I was really bothered by how the bright red neckline extension, currently at 35,315 of the October 23 to January 24 reverse head and shoulders pattern bottom, could really slow up and hold down prices. And I am even more concerned after the action of recent weeks, especially after what happened 2 weeks ago with a 3-day bearish evening doji star pattern, something that took all of its 3 days to construct. Thus, whilst I have now shelved the idea for a big bearish halfway hesitation here, though I am still on the lookout for the next pattern idea. I might now just start watching towards the both upside and the downside, just in case.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.